Hello, friends, and welcome back for another Bitcoin technical analysis episode with me, your friend, Rocky Outcrop. In today's episode, we'll be checking out the macro, the micro, and the Mickey Mouse and everything in between. So let's just dive on over to the charts and take a look at what's been going on. A couple of seconds, and we'll be back in them. Okay, so just had to roll those intros. I do it at the start of every episode. Let me know in the comments down below if you think I should just ditch them all together. I'm not actually 100% sure, but I do like having a wee divider there. Current price is 9,558. I think that's a fairly crucial price, and we'll come back and revisit all of that in just a moment. As you can see, I've got the weekly chart up behind me here. This is the Bitcoin versus US dollar through Bitstamp. Obviously, this is trading view. So thanks so much for joining me. Pardon me. Now, obviously, I'm making myself sick here before even starting. I just wanted to say thank you so much to everybody who has liked and subscribed so far. I check it every day because I make daily videos, so I see that going up all the time, and it's just overwhelming. It's really super positive, and I'm so grateful for it. And I think of all of you out there as being like another sort of one of me, like that you're sort of that we would really get on. I don't know why, but I think that we're friends almost. It's kind of weird. Anyway, thank you so much for all of that. Now, in terms of people who haven't subscribed, some of them have left me feedback saying, and different, using different words, of course, that I talk too quickly and that I need to slow down. So I'm going to endeavour to do that in this episode. But again, like I say, I think I kind of all of you as being kind of with the same sort of brain as myself. So when I'm talking quickly, I kind of just assume that you get it because I can watch the videos back afterwards and I'm like, I get that. And anyway, right, I digress. So let's just look at the charts, and I'll try. Let me know in the comments below if you give a shit or not. Excuse me, sorry about the language. So anyway, I started off on the weekly chart here really because I just wanted to draw our attention back to what we've really been talking about for the last couple of weeks, and that is whether or not we can have a lower high on the weekly chart be put in, or a higher low, sorry, in here, and actually manage to, oh wow, gee, thanks. I'm sorry, that's 10 seconds out of the video there in terms of me just being flabbergasted. So that's brilliant. I just got given a cup of tea. You don't get much better than that. Who cares what the Bitcoin price is? Anyway, we talk about how we want this to close above the bodies of these candles over here. That's really what we're looking at here. And of course, we would have liked it had it happened a couple of weeks ago and that just been it. And then we would have liked it had it been last week and that just been it. And of course, we would like it if it's just this week being come on or whatever and that just be it. So and then if next week we could start going up, that would be dandy. Although there is still room to the downside, really, for the prices to go. So and still actually setting a higher low if we look at different time frames. So let's just go down to 24 hour to point that out and say, look here, as long as the prices are essentially above what we're talking 9,150, then you're still setting in a higher low on the daily time frame. And you can even flick this around multiple different ways and think about it from whatever perspective you want to look at it. I mean, here we are in the monthly chart, and we're actually just getting follow through. We're not actually had, of course, we've got a big wick up here, and that's not fantastic. But then I invite anybody to show me a month in the last sort of year where we haven't had big wicks. So this is Bitcoin, this is crypto, this is what we're trading here. So we've got a big old wick at the top here, but I'm not going to start saying that this is necessarily a rejection wick when we've had just so many of these things, and overall it's a green candle. So that's what we've got going on. That's the situation that we're facing at the minute. And you might have heard a song by a Scottish guy. He must be Scottish because his name's Louis Armstrong, so this is about as Scottish a name as you can get. So and it's called "Love Is in the Air." You might have heard that song, and I've got that running through my head at the minute here. But fear is in the air, fear is in the air, every sight and every sound. So there's a lot of fear out there in the market, and no doubt the entire Twitter and YouTube sphere is full of and Trading Views ideas page and everything is full of hellish bullish, hellish bearish news and things like clickbaity news headlines like coronavirus market shock makes its waves on Bitcoin, or whatever, and you think, oh my god, what is this? Prominent analysts predicts big pullback as market reacts to coronavirus, whatever it happens to be, you know. And there's loads of sort of BS like that out there at the minute, really, and people aren't actually looking at the reality. And the reality of it is that we're not even below the highs of the previous high in this upward movement here. So, you know, let's just remove all the fear and greed and FOMO from our analysis, can we please, and just sort of focus on what really matters. What really matters is that there was a golden cross here recently. The prices have had a big subsequently in and around the area, a big pullback, and that's kind of par for the course. People like to sort of only focus on this and say, yeah, big price movements coming, the big upside coming because we've just had this. Well, that's not the reality. That's not the reality from trading. And of course, you get a big pullback when around these things normally. And where we're trading in and around is just in and around this 21 moving average at the minute, really. Like we've for the last week we've had averagey prices, you know, like averagey, and we've been coming down here, and sure, we've been trying to sort of find a foothold for support. Now, obviously that sounds quite sort of bullish, I suppose, in this binary world that we live in, where if either I'm ultra bearish or I'm ultra bullish or whatever. But that isn't, you know, I'm just talking about the realities that we've got here, and the reality is that so long as the price is above 9,200, just to round it up, then you're making higher lows, and higher lows are part of an uptrend, you know, and that's just par for the course. So let's not get our knickers in too much of a twist at any given time, but let's be aware of things though as well. Like if you're experiencing a lot of fear right now, then the likelihood is it's because maybe you only went long around here at the top here, and then lived through a degree of fear here, but then prices went back up, and now you're starting to think, oh god, I missed out on all of that potential profit. So just review your own history and think to yourself, well, we did speak about these areas on the way up here for taking profits at, and we could have done that, so it would have been wise to do that then. And then of course you'd maybe be thinking, I'm tempted to re-enter onto my long here, you know, you might not be so fearful at all, and then you'd be managing risk maybe down here where it could go on to set a lower high, and you could think, well, made a lot of profit on all the last moves for the last couple of months, and now we've had what it would maybe turn into some sort of head and shoulders thing, and I'll ditch profit now as well. The other thing, right, so let's skip all that, let's go down to some micro for some more Mickey Mouseo, and you can see there was this head and shoulders here, which I pointed out in the run up to it potentially forming, and then it formed, and the whole time we said this is a bit of a BS one, to be honest with you. And what's happened since is we come back up above the neckline and back down below the neckline, and we've never had any measured move off the back of it, so we probably won't get one. I mean, like, that's probably, if there is a price up and down, some people will point back and say, oh yes, we had this head and shoulders here, but I mean, come on. And then so we're looking at the 24-hour chart here. Could you get some sort of head and shoulders type thing here with some sort of really crappy twisted one? I mean, maybe, but not really. And it's actually more to do with the psychology behind these things. It's when you're looking at head and shoulders, if we just take this so-called one off the 4-hour chart, you think, oh, there's all this positivity in the market, then we get our drawback. You think people start thinking, oh, this is our higher low, then we go up here and we set in another high, and then people start thinking, well, we'll set in another higher low, so then you maybe get one here or here, and then, oh no, the price goes down and it comes up, and then people were thinking, well, we didn't get a higher low, in fact we got a lower low, and now we've had a lower high. So that's the psychology of the head and shoulders pattern, not this pattern in general in total, and people just tune into it at the very end and go, oh, I see a pattern retrospectively, now I'm going to trade this thing. No, it's that you're aware in advance that people have become used to higher highs and higher lows, and then all of a sudden you go through a period of time where you're no longer getting higher highs and higher lows, but you start getting a lower high and a lower low, and that's a psychological impact of that, and how that would then affect things. And then of course then where you look to naturally would be to previous levels of support and resistance, and that's why these measured moves work out this way. That's why this happens, you know. So don't get too carried away with any particular pattern, is all I'm really saying. And all that's really going on here is that we're consolidating sideways, you know, and we're consolidating at an area of historical support and resistance, you know, and a big Fibonacci. That's the whole history of it right there, as you can see. And then the Fibonacci retracements we've got here from June 2019 down to December 2019 show that we've got this 382 coming in around where the prices have wicked down as low as, and in terms of where the prices have come down a couple more times more consistently over the last wee while, you've got the bigger sort of longer term Fibonacci, retracement from all the way over here in the all-time highs down to the lows of the previous market cycle, coming in at this green line right here that we're looking at on the weekly chart. So as we're coming towards the middle of this week, let's start like looking towards the end of this week and what could be happening at the start of next week, and realize that it could go either way. It could always go either way. That's the thing as well. And if it were to go either way, then we'd have a couple of benchmarks that we'd be passing through on the way there, and that's good enough, right? And then on the upside, we'd have a couple of other benchmarks where we'd also pass through there, and that's also good enough. And to remain not overly greedy or overly fearful as we go through either of those points, because as I say it now, mark my words, there's a lot of fear, no doubt, in the market. Now, I'm not tuned into all these other things. It's just there will be, right? There just will be. I've lived enough of this trading time to know it, and that equally, as soon as we go back up here, even though it's just going to be just up here at the 50% retrace line, even though it's just going to be there, you can anticipate people going ultra bullish again, ultra bullish, and we'll have phrases like people saying, "Oh yeah, we managed to do whatever, and now because we've done this whatever, that's extremely bullish," you know. And people don't really think about the words that they use in their language. You know, that's very provocative language there to say extremely bullish, you know. Because things that are extremely bullish, for instance, you could easily say that this golden cross here on the 50 simple, 200 simple is extremely bullish, but that's what leads people into completely dismissing the idea that frequently upon golden crosses you get 10% plus pullbacks on your prices. You know, like that's so don't let the language sort of conflate your own emotions and your own thoughts as we're looking at things. I suppose this is less of a technical analysis episode. It's actually a pure technical analysis episode, right? But I've done so little in terms of like pointing at the prices and drawing lines on the charts and everything else, like so few the gimmicks in terms of technical analysis. I'm just talking about what it is to be a technical analyst, okay, and what it is or to be a trader, actually, not an analyst, because analysts can do what they like. To be a trader, to actually have skin in the game, means you need to remove these other facets from your psychology, such as the fear and the greed. So anyway, I've also said as well, to be quite clear, that the prices could go either way. They could go either way. Overall, we're in an uptrend, right? Until such times as we start showing that we're not in an uptrend, and we still are, right? And that means that there's a sort of leaning towards the upside in terms of the prices and whatnot. But in terms of managing your risk and your entries, your exits, your longs, your profit margins, and everything else or whatever, you can just see these numbers over here on the right-hand side that kind of just more or less tell you where they are. Look, 9276, 9469, 9989, 9150 or 10150, 10500. And here you've got 9850. All of these things. So even as we see right now as it's happening, I'm sure. Let's just go down to something that makes it look a bit more scary. And like the you can see here. Well, it's quite hard after having spoken about it for quite a while to come up with just immediate ideas to show you why it's scary. But you can see right now as we're talking, we're putting in potentially going down to potentially break this resistance. I don't know. I mean, I'm trying to come up with fearful type. You have to put yourself in that mindset, is what I'm saying. You know, the mindset which I'm in right now is preventing me from putting myself into that fearful mindset. And if you're in that fearful mindset, then you need to sort of back off a little, right? And if you're not in that, if you want to be in that mindset, you actually have to put yourself into that mindset. And the way that you do it is through various things. Like one is you take far too big margin on your position, far too little margin on your position, far too big leverage on your position, so you're worried about being liquidated, you know, all the time. That creates its own emotional things. You look at so much FOMO analysis and read FOMO stuff on the internet. You just employ confirmation bias as opposed to actual technical analysis when it comes to making your decision making. You don't actually do any risk assessment at all, and you tend to think of trading as choosing targets for prices to go to, as opposed to areas to where you would manage your risk, you know. And if you're just looking purely on a risk management basis, you'll be a heck of a lot more profitable than you will on the other side. So thanks so much. This is a little bit of an unusual video for me actually today. Spent most of the time thanking people and being discursive about what it is to be an analyst. But I really hope that it helps, especially right now when I guess this is probably going to be quite a different video to what you've got popping up on your streams today. So anyway, like and subscribe, and let's all come back and eat a whole bunch of humble pie whenever the complete bottom falls out of the market tomorrow, shall we? Just kidding, by the way. That's me kidding. That's a joke, right? Okay, sorry. Like and subscribe, all that sort of stuff. It's really, really fantastic, and I really, really, really genuinely appreciate it. And share this video with any friends that you have, and let me know, did I actually end up talking slower? I think I probably just reverted to type, and I can't help it, right? It's just, if you appreciate me talking at this speed, then let me know. Otherwise, I'm just going to keep doing my own thing, and I hope that that's okay for everybody. Right, okay, yeah, thanks so much. See you in the next one.